Hello, ladies and gents, and welcome to another episode of the official Property Entrepreneur podcast. We are taking a different angle today and moving away from business, which is what we primarily focus on. And I've got a very, very special guest for you where we're going to look at some property things. So long-standing friend, mentor, business partner joining me today, who actually taught me everything that I know about property and how to invest. And one of the things that keeps cropping up recently is people are asking about, they look at the deals we're doing, whether it's small residential houses or it's 6, 7, 8-figure developments. And they're asking, how do you do deals of that size? And where do you get the capital from? Now, the biggest thing you'll learn when you start to understand how to invest is it's not necessarily about the amount of capital you've got. It's sometimes the amount of capital you've got access to, or even what we're going to cover in this podcast, the amount of strategies and creative solutions you've got access to. So coming in live today from the south of France on his birthday week in the nice sun is my long-standing friend, business partner and mentor, Mr. Simon Zutshi. How are we doing, Simon?
Hello, Dan. I am fantastic. It's slightly warm here, as I know it's in England as well. But thank you so much for asking me on this podcast. And we got some really valuable information to share, everyone. So thanks for asking me to share today.
Yeah, it's a pleasure. I suppose the main objective here is to inspire people to what's possible. Because when I first read your book, Property Magic, it's called magic for a reason. The strategies that you learn how to adopt, you just wouldn't believe that, or you wouldn't know they exist. You'd never know they exist. And you would even in practice you'd struggle to believe that they're possible. And one of the conversations you and I had recently was around some creative strategies. And you were saying, people always ask, why would a buyer do that? Or why would a seller do that? And we talked about a few case studies where I've done it from both sides. So I thought, let's talk about it. Let's inspire people. Let's give them some direction, and probably starting from the top. When we talk about creative finance solutions or creative strategies, what do we actually mean?
Okay, great question, Dan. And I think one of the first things to say is that, when you invest in property, most people assume that you need a lot of money to invest, because generally you need a deposit, 25%, you might get a mortgage from the bank for 75%, and there might be some other money required to fix up the property or add value to it. And the point is that everybody runs out of their own money at some point, and they think they have to stop investing. But when you understand creative finance, you realize that actually, although some money is required usually to do a deal, it really doesn't have to be your money. Now, I think most people understand the idea of a joint venture where you might have a great property deal, but you've run out of your own cash. Someone else has got money, but maybe they don't have the time or the knowledge or the inclination to do it themselves. So they put the money in, you've got the deal, and there's a share of cash flow and share of extra growth. I think a lot of people are familiar with that. And people think that's what creative finance is. But there's so much more to creative finance than that. Even there's more than just doing a loan where you give someone a fixed interest rate in return for lending you money. And those are all great. They work really well. But there are a couple of more strategies that I'd like to explore at a very top level. And then maybe we can talk about some practical examples. I know, Dan, I've taught you this, right? You've used these in practice. So I'll give you a bit of theory, then we'll come into some practical examples, if that's okay.
Yeah, absolutely.
So the first one is a lease option. Now, this is something that's called purchase lease options or purchase options or lease options. And a lot of people have heard about these magical tools, but they really don't understand them. And there's a lot of misconceptions and misunderstanding. To keep it as simple as I possibly can, you find someone, let's talk about a lease option. You find someone who's got a property, and for whatever reason, they don't really want that property anymore. Maybe they are a tired landlord and they want to retire and get out the game. We're seeing more and more landlords retiring due to the potential EPC challenges in 2025 and the abolition of Section 21 and interest rates coming out. So more and more landlords looking to get out the game. And if you imagine a landlord with maybe 5 properties, if they sold all of those properties in one go, they'd pay a lot of capital gains tax. Whereas if they could spread the sales over a number of years, maybe do one property each year they could use their personal capital gains tax allowance, and they would then minimize the amount of capital gains tax they're paying. And at the same time, someone comes in and takes away all the hassle and responsibility. So rather than hang around for 5 years to get rid of the properties, they can go on and sit on a beach somewhere and enjoy the rest of their life, knowing that someone else looking after the property. And even they can make more money from the sale than a traditional sale right now. So that's why it works for tired of retiring landlords. And as investors looking to take properties on, it means we can control a property. We don't need to put a big deposit in. We don't need to get a mortgage, which means we can actually do the deal in a few weeks rather than a few months. We can start getting cash flow and equity growth from a property we don't even own. So that works incredibly well when we're doing a purchase lease option. And I know, Dan, let's talk about you, because I know you've actually, you've done our training, done really well. You started rent to rent to prove the model. You went on to HMOs, built a really substantial portfolio, built a lettings business around it. But I know that you got to a point where I don't think you wanted the hassle of dealing with your portfolio, because you wanted to go into bigger developments and you made a lot more money by doing big developments. So you've now passed your properties on to someone else on an option. That's right, isn't it?
Yeah, absolutely. So people who are listening who've not heard of purchase lease options before, what Simon's explaining is a contract that's basically two parts. One is a lease where somebody else owns a property, and rather than buy it, you lease it. It's the same as you would doing a rent-to-rent strategy, something like that. Then the real appeal and that will give you a good cash flow strategy, HMOs, service accommodation, and anything like that, back-to-back leasing. But then the option element is like really attractive for us as investors, or rather for you as investors, because you can get an option to buy it at today's price, which might be £500,000, but you don't have to complete for 5 years. And if you think what that would have looked like over the last 5 years, it would have been a significant capital increase of, say, 500 to 700. And then, you would exercise a sale at 700. The option agreement will go to the solicitors, 200 will go to you, 500 to the landlord. And, they've had the property looked after for 5 years, and you've made yourself £200,000 on a property you might have only paid £1 to take control of, plus your legals.
And Dan, so, just on that note, so there are two things you do that. You can either sell it on in that way you haven't and just make a profit, or if you have had a good bit of capital growth there are some creative ways that you can actually buy that asset without having to put down a big deposit. And we won't go into that today because it would take too long to explain, but I just want to stimulate people's thinking. Not only can you control the asset, get cash flow now and benefit from the potential capital growth, if there's been a good amount of growth, you can actually eventually buy that asset, put into your portfolio, again, using very little of your own money.
Absolutely. And where on the blueprints that you hear on Property Entrepreneur, when you think, I can't believe I didn't know that before, like that's so straightforward. Property Investors Network and Simon's Mastermind program and PIN is exactly the same, but for property. We do the business, Simon does the property, and you learn these magic tips and tricks and strategies that open the box to doing things you've not done before. And when you understand it, one of the things that, because it sounds so outrageous, you think, how would that, how that sounds so lucrative, it could be really great. The big question we always get is people say, well, why would the landlord not want to do this themselves? If they've got a HMO, why would they want to lease it to me? Why would they not want to run it themselves? And this is one of the questions Simon asked me, is like, as a landlord, as somebody who owns property, and I know how all this game works, why would I remotely be interested in leasing all of my HMOs to somebody else and then let them have the cash flow and let them make £500, £800, £1,000 a month per property from my property? Why wouldn't I do it myself? Well, all of this comes down to, same as a negotiation, is understanding people's objectives. And when I started my property journey with Simon back in 2010, 2011, initially I wanted cash flow. So I started doing this strategy with other landlords, rent to rent, leasing it off a landlord, and then leasing it on as a HMO, and that generated cash flow. As I started to get my cash flow and my experience up, I then started to buy properties and built a HMO portfolio, built that up to several hundred rooms. And that was great. It paid cash flow. I owned the properties. It did me really well. And I ran that business for, that paid everyone's salary, everyone's overheads, made profit every month and every year for 5 or 6 years. But then 5 or 6 years later, those properties are starting to get a bit tired. The market's got more competitive. I'm off doing 6 and 7 figure developments, and I've got HMOs with tenants drinking each other's milk. And I'm just sitting there thinking, do you know what? I don't need this cash flow anymore, or rather I don't need the cash flow, and I definitely don't need the headache. I need the time. But I didn't really want to sell because I knew the market was on its way up, and I didn't want to dump all my stock because I had literally hundreds of units at one time. So I went looking for investors. I said, I know what I'll do. I'd be happy to take, I don't need the cash flow margin anymore. I just want the asset margin, which is basically the equity in the portfolio paying me 8%, 10% a year. And somebody else who would like to do the hard work and put a bit of money into the properties and take over the headache and the responsibility, I'm happy for them to make the money if they take all those things off me. So I actually, for over a period of about 6 months, sold every single HMO that I own on lease options to another investor, and they had a 5-year lease with an option that's now actually completed, and they probably made a good maybe 250,000, 300,000 pound equity during that period. But I also made £750,000 on the exit, and on the side with my time I bought back would have made several millions of pounds in other deals, which is far more lucrative for me. So it really is a win-win-win. Like that is really the aim of the game with any deal, is making sure everyone wins. And that's why, from my side, I would do deals like that.
As you know, Dan, it's that win-win we teach. And I think very often when someone is in business or in property, they wasn't just thinking about themselves. And you're so right. You need to step into the shoes of the person on the other side, understand what do they really want. And if you can give them what they want, they're far more likely to give you what you want. You can find this mutual ground and negotiate a true win-win.
And equally, it's like, don't waste your time. If you're going to if you sort of get this strategy and you're going to go and pitch people, if you've just seen somebody who's spent £200,000 developing an 8-bed ensuite HMO and their intention is to run it through a letting agent themselves, you're going to find it very, very difficult to pitch because they want the cash flow that you want. So it's like, it's not really going to work. Whereas if you find someone, this is a really great strategy at the minute that I've sort of come across, is at the minute, obviously everyone's utility bills are going to go up, and that's in a house where you control your own usage. Imagine what that's going to be like in an 8-bed HMO where the thermostat is the window and the radiator is the drying rack. It's like, it's literally going to burn through money, burn through margins. And you think that might have been a great deal 2 years ago, but with increasing interest rates, increasing utility costs, there's going to be some landlords there with great looking properties, but they just don't work. Whereas if you could then lease it and do a back-to-back lease, which gets them out of a difficult position, but you equally don't want to take on the problem of utilities. But if you could offset that to a sector that doesn't need that, whether it's the council, housing association, supported living, as long as you can make sure the strategy meets the property and the numbers work, rather than trying to absorb and accommodate those increased costs, you can actually offset them. And that's what I've done on any HMOs I have still got. I've actually leased those all out now to third parties just on leases, and I've kept them. And I do the same with my apartment blocks.
Yeah, exactly. And Dan, it's just about, sometimes people, they learn a strategy, they do the strategy, they're very successful, they keep on doing it. And that's great. But what got you to where you are now might not. Do need to learn some new things and pivot with the market. The market changing is a really important thing to do, right?
100%. Yeah. And like you say, objectives, it's the same as working with investors. The first question you want to ask an investor is, what are you trying to achieve? And if they say, I need 20% return on my money, they're going to be a high risk investor. They're going to have to be unsecured. They're going to get that.
Yeah.
Whereas if they say, I lost £500,000 in 𝗁𝗵𝗶𝘀 when it went down, I don't really care about the cash flow. I need security because I've got £1 million in the bank and I don't want the same to happen again. You're going to be talking about first charge 5 and 6% deals. So it's exactly the same with investment strategies. And as the market's changing, it's getting creative with it. And look, we've used purchase lease options and options from both sides of the fence.
Great. So the other strategy that, again, people have sometimes heard about, but they certainly don't know how to use, or they think it's not possible, is vendor finance. Now, this is used a huge amount in businesses. I know, Dan, we send all of our mastermind students to you to learn about how to scale and grow their business. I know you send some of your guys to us to learn about property, right? That's the way it works. But in business, many, many businesses are sold on vendor finance. And increasingly, one of our mastermind students are buying properties with vendor finance. So what is vendor finance? Well, basically, it's where someone may not want to do an option. They don't want to agree a sale in 5 years' time. They want to get a sale done now, but they don't really need the cash. The cash they're going to make from the sale, they might clear a mortgage, they might own it 100%, but the cash is just going to sit in a bank doing absolutely nothing for them. So this is a way that you as a buyer can go to someone and say, look, I'll give you the full asking price, maybe even slightly more than the asking price. And then I'm going to buy the property and I need your help to do it. So some of their equity stays in as the deposit. Now, one of the challenges here is most UK banks will not lend you money to do vendor finance because they want to see you put money into the deal. They want to see you have some skin in the game. Okay. So the way you actually do this, you'd probably buy it with bridging finance. and a deposit from the owner. And then 6 months later, you refinance it onto a normal lenders. That's how you actually do it, right? But the whole point is that if someone sells a property, they lose all the income from that property. However, we can keep on giving them an income because the money they've left in, we give them a return. Now, it might only be 2 or 3%, but that's still a lot more than they're getting in the bank. So someone could sell a £300,000 property. It might be the 100,000 of that is left in the property as a private loan. We might be giving them 3% on that money over the next 5 years. So that's £3,000 a year, 15,000 over 5 years. So in other words, that £300,000 property, that's the true market value. They've effectively sold it for 315, 300 now, and then 15 over the next 5 years. And eventually you pay the balance to them that you're owed by refinancing or paying off from another deal. So again, you can do this to buy property. You could do it to buy business. I know, Dan, you're using this to buy your schools, aren't you?
Yeah, absolutely. So in commercial, it's even, I'm not sure if they're still doing residential. I know they did back in the day when I started, vendor gifted deposits. So are they still around now?
No, you can have a 5% gifted deposit. When you started down, we could get, I think, 15% gifted deposits. You can only do 5% now. So you have to structure it like anything. There's a little bit of knowledge can be a dangerous thing. You need to know how to do these things properly. But when you understand and you got your head around it, it's actually quite straightforward. You just need to follow the step-by-step process.
Yeah, absolutely. And yeah, that is a really important point because we're talking at quite pace here about how to do these things. Simon's actually
floating an idea, really, you know.
Yeah, absolutely. Simon's actually going to be running an event, which I'm speaking at in a few weeks, which we'll talk about at the end of this. And those of you that are serious about buying property with no or low money down, using vendor finance, lease options, make sure you carve out a couple of hours to attend that. It's going to cover this in the detail you need.
Yeah.
And it's completely achievable. Like I've been using this for 10 years and it absolutely works. And most recently, we've been using it for schools. So we're doing a roll up, buying private schools. And we've actually now, because it's commercial, we've actually got a lender on board, quite a niche lender, you know, that you are dealing with humans rather than sort of the big corporates, but they've actually accepted deferred payments. So we've gone to our people we're buying schools off and negotiated deferred payments where an element of the purchase is actually paid later. But because it's genuine equity, the bank is accepting it as basically a vendor gifted deposit, but it's vendor finance. And it just means that it takes the pressure off what we're doing. And you think, why would that person want to do that? Well, in some cases, we're paying them more money. We're buying the school for a price that nobody else would buy it for on the basis that they agree to leave the capital in. Sometimes it's just a rate. So we might pay them an extra 5% cash flow on the money because it gives them, you know, an extra amount of funds from that capital. And the other thing, security. You know, a lot of these people are retiring and maybe their pensions are full or they've already used their annual allowance. Not only have they got the capital gains tax to pay, but if they've then got all of this capital, which is their life savings going into a bank, people may or may not be aware, you can't have any more than, is it 80 or 85,000?
85,000 protected by the Financial Services Compensation Scheme. Yeah. So if you've got lots of money at the moment, you need to make sure it's spread across different bank accounts. Because if, you know, we saw in the last recession, we saw RBS, Lloyds Bank, all had to be.
One of our business partners lost £300,000 in Lehman Brothers, like overnight.
Absolutely.
It wasn't guaranteed. So
no. So only 85,000. And you've got to be also careful because you sometimes have a bank that's part of the same group. So it's only within groups as well. So you've got to make sure you've got different banks, different groups, maximum 85,000 in. You're going to have more money in the account, but you're only protected for the first 85,000.
Absolutely. And there's all these reasons why it is an absolute no-brainer. And I'll just say the biggest thing for people listening to this, thinking, you know, this sounds too good to be true. It's like, this is just how we play the game, whether it's the stuff we teach on Property Entrepreneur, like things like directors ISAs or CDIS, EIS. It's like, these are the magical things in business that work. And this is exactly what Simon teaches on Mastermind with the property magic side of things, is all about how to use these strategies. And you wouldn't believe that they existed when you first hear them. And then when you hear them, you don't believe that they actually work. But I can say I've done millions and millions of pounds of deals over the last 10 years and are 100% they absolutely work.
And Dan, it's great. People can either listen to, you know, keyboard warriors on the internet who don't know what they're doing. Oh, you can't do these things. Well, if you believe you can or believe you can't, you're absolutely right, as Henry Ford said, right? So you got to listen to people who have done these things and are doing these things. And if someone else has done something, it means it's possible. And you need to learn how they've done it, obviously. But this is the whole point, guys. Your future is completely down to you. But you have to take responsibility for it and arm yourself with the right tools to make the most of the opportunity. And no, Dan, we talked a lot about recession and it coming, and a lot of people, unfortunately, are going to do very badly in this recession if you decide to allow it to affect you that way. It's completely your choice how you take this recession, and recognize that people like Richard Branson, if you look at his book, Like a Virgin, he says in there categorically, if he was starting from the beginning again, he would only buy during recessions because things are always cheaper and the investment is good for the economy anyway. So you got to recognize, and you talk about this herd mentality, Dan, and, observe the masses and do the opposite. This is exactly the time. That is so true more than any other time before. You got to be prepared, guys, because there will be some winners and losers, and you get to decide which side of the equation you sit on.
Yeah, absolutely. And it's a very small window of opportunity. So the bounce back boom, which has been these last 2 years, there's 3 phases to it. Whether you read what we put out there or you read the government reports, there's 3 phases to it. The first 2 phases, the world nearly ended. We had pandemic, we had lockdown. Economically, it was like nobody had ever seen it coming. But in phase 1, we made £1.9 million profit on top of our existing businesses that we could never do before COVID, never do it after. In the second phase, we did 3.5 million and had our biggest year ever on record ever in all the companies that I've ever built. And now we've got phase 3. Like most people listening to this would have missed phase 1 and missed phase 2. This phase 3, as we go into this rebuild and come through the recession, come out the other end, it'll be a very small window of opportunity that we'll have in property, in business, in investment, in economics. And then it'll be another 15, 20 years. And for some of us, we won't have the energy to go again in 15, 20 years. So we've got 18 to 24 months to really make the most of this.
Dan, I remember back in 2008, we were only a couple of years into doing the mastermind program. And, when we first started mastermind, we were using the same day remortgage from Mortgage Express, find a motivated seller, as long as it's 15% or more discount. I remember the market back in 2006, 2007 was booming. You could always find motivated sellers if you know what to do, no matter what the market's doing. And we were buying properties, no money down, getting paid to buy property. And suddenly in May 2008, Mortgage Express pulled the plug. You couldn't do it that way. And we had to adapt. And I know people who'd bought literally hundreds of properties, 2006, 2007, and in the beginning of 2008. But because they didn't adapt, because they didn't change, they just stopped. They did nothing for years. And I remember telling people in 2008, even though prices were coming, I said, guys, fill your boots now. This is going to be one of the best times this decade to buy. And those people who said, well, okay, Simon, we're going to trust you and you're going to get on and do it, who did it, have done so well. And the others said, well, let's wait and see, kick themselves for missing the best buying opportunity. So Dan's right. This thing doesn't happen very often. And if you don't take action and really learn about this and know how to do it and get in and stuck in the next 12 months, you're probably going to miss this, and you have to wait another 10, 15 years for an opportunity like this.
I think a big part of it as well is just being savvy enough and having being savvy enough and sort of dynamic enough to change as well, because a lot of people get comfortable, especially when they start making some money and start to think, start to rest on the laurels, everything will pass, bury the head in the sand. And unfortunately, like Warren Buffett says, when the water goes out, you find out who's been swimming naked, and the water's going out. You've got,
water is going out very fast.
Yeah. You've got two choices right now. It's get really savvy about this and take some of this stuff on board and do it, or, the tide's going to go out, and it's going to take some people with it. I mean, to give people an example of what this looks like in practice is, in this first 6 weeks of the lockdown, I had millions of pounds worth of developments going on. And I said to Jen, our head of portfolio builder, in the first 6 weeks of the pandemic, I said, we need to go from the top of the market to the bottom. And that was in the first 6 weeks of the pandemic. We didn't know if it was going to last 6 weeks or 6 months or 6 years. And we strategically, in the middle of developments, went from the top of the market, which was high-end, £900 studio apartments a month, all the way down to the bottom of LHA, homeless, social housing. And that strategy has made us more money over the last 2 years than any other strategy we could have done, because we changed our whole business model on its head in the middle of, at the beginning of the pandemic. Now we're going to see the next phases of the market changing as things happen. Market cools, utility costs go up, interest rate goes up, GDP comes down. A lot of stuff's going to be changing, and now is going to be the next period to make those adjustments of, you know, what is it? Is it build to sell? Is it build to rent? Is it lease options? It's like you need to have all these tools in your arsenal to make those decisions.
The thing I love about lease options, Dan, is no matter what strategy you're doing, if you're new and you're doing rent to rent, you should absolutely do lease options instead of rent to rent because it's so much more powerful. If you're already doing HMOs or service accommodation, if you're doing commercial to residential development or just commercial property, in the right circumstances, lease options can work across all of those. So lease options is not really a strategy, it's really a tool that can be used to control property using very little of your own money.
Yeah, absolutely. I've done lease options on 80 grand houses. We've got clients on it. We've got board members on Property Entrepreneur who've used it to do 10 million pound developments, and they've paid like a quid or 10 grand or 100 grand in some cases. But it's a big difference between putting £1 million down and putting 10 grand down. It's yeah, it's very, very powerful. Simon's got an event coming up, Property Magic Live, where I'm going to be speaking, and there's going to be a number of other experts talking about these creative strategies. Simon, for people that have listened to this and they like the idea of acquiring property, controlling property without having to have that huge capital outlay, whether it's small houses or it's, you know, 7, 8, 9 figure developments, what is Property Magic? What are we going to cover? When is it? And I know we said that we'll be able to do a special offer for the property entrepreneurs on the podcast. How can they get themselves a place?
Great. Okay. So first of all, Property Magic Live is an annual event. We started back in 2008 when actually I'd written the book in 2008 and the market completely changed and everyone was panicking. I thought, look, guys, let's get your head straight here. So there's a lot of mindset stuff in there to really keep people on track and focused and in the game. That's the first thing. But actually, we always look at what's happening in the market and what are the best strategies for moving forward. So this year, we're going to be really focusing on what we've just talked about: purchase options, lease options, and also vendor finance, because you know, none of us know what's going to happen in the market, Dan. We'd be very surprised what's happened the last couple of years, whether the market's going up or whether the market's coming down. These tools work incredibly well. So if you were not using these already, you are absolutely missing a trick. And just to be clear, purchase options don't work on every deal. Vendor finance don't work on every deal. You want this toolkit. So when you meet a seller, you find out what's going on for them and you can pick the relevant tool that helps them, gives them what they need, and also gives you what you need. So if you've only got one tool in your, like if you've only got a hammer in your toolkit, everything starts looking like a nail, right? And it's not going to be appropriate. So it's about giving you a toolkit to make sure no matter what happens in the market, whether it continues to go up or does start to decline, you've got the relevant strategy to move using forward. Now, that's if you are looking to buy property, but also if you're selling. Dan, you and I have both sold properties over the last couple of years. I recommend all people who've been in property for a while to every year look at their portfolio and really analyze it. What are the good deals? What are the ones that are not so good? I've been investing for 27 years, Dan, and I bought a number of properties over that time, which at the time might have seemed like a really good deal, knowing what I knew at that time. But knowing what I know now and happening in the market, if I had a second chance, some of those I wouldn't buy. So those properties I generally get rid of, take the equity out and use it elsewhere. So whether you're looking to buy properties or even sell properties, understanding these two tools, vendor finance and purchase options, are incredibly powerful. It just gives you far more choice. And no matter which side of the equation on, it can help you make more money. So those are the two strategies we're going to focus on. And what I also do, you quite rightly said, Dan, sometimes you hear about this, oh, it's amazing, but I don't believe you can actually do it, particularly in today's market. We get some of our current mastermind students who over the last 12 months have been doing these strategies, even in this booming market, doing very, very well. And we get them to share what they've done because it builds a belief. If these people have done it, it means it's possible. It means you can do it as well. So it helps build your mindset, helps build your belief. We give you the actual strategy you need to move forward, gives you a real boost to your motivation, and also helps you connect because we're doing it as a hybrid event this year. The dates, by the way, are the 9th to 11th of September. So Friday the 9th to Sunday the 11th, it's a full 3 days. And we're doing it as a hybrid event. So having a very small number of people live in the room in Birmingham, just by Birmingham NEC. And that's going to be my main mastermind students, people like Dan, guests, and obviously anyone who upgrades to a VIP. So a small group in the room, but then also the majority of people are going to be watching virtually from the comfort of their own home, thanks to Zoom. And we got people from all around the UK. We also get a lot of international investors who want to access the UK market. They want to meet people on the ground in the UK. So you want to pick up international investors or connect with those kind of people. Again, this is a great way to build your network. And I'm a great believer that your network is your net worth. So that's what the event's all about. Now, the tickets are typically £1,000 to £2,000, depending what level you go for, and if it's virtual to physical. And the reason we do a paid event, Dan, is because we attract a more serious type of person. We do lots of free things. We have lots of free webinars, and you'll be having to have some free events. And they're great. I go to free events. I know you do as well. You can always get value from those events. But you know what? I want to be a bit honest here, if that's okay, Dan, but of true love. Sometimes people who go to free events, because it's free, they don't value it and they don't take action. And sometimes it's not the best people to network with. And whenever I go to an event, even if it's a low cost, I will always pay to upgrade to go VIP, because I want to connect with the other people who have also invested themselves and who are also VIP. So that's why this is a paid event. We get a much higher caliber of person, people who are completely new, starting the journey, people who are very experienced, who've done mastermind many years ago. They're really successful, but they keep coming each year to get an update on their knowledge, to get that boost of motivation, and to connect with more people. So it's an incredible event. You can find out all about the event. I think we'll probably put a link in the show notes as well. The website is propertymagiclive.co.uk. All the details about the event are there. But Dan, as we agreed, for anyone who listens to the Property Entrepreneur podcast, we have a bit of a special deal. If they take action quickly, I like to reward action takers, because action takers, people decisive, are generally more successful people. So we've got a little bit of a hidden page. I'm going to tell you the link to it in a moment, where if you go, you can get, I think, instead of a virtual ticket, instead of for £1,000, you get it for like £200 per spat. And if you want to come and join us physically in the room for 3 days, get all your food and everything included, instead of £1,500, because you listen to the Property Entrepreneur podcast, I think you get it for $497 plus VAT. So massively discounted rates. And by the way, as usual, we have our money back guarantee. What that means is you can come either virtually or physically in the room after a whole day and a half. If you don't think it's one of the best property training events you've ever done, if you can't see how you get at least a 10 times return on your investment, or you might say, look, it's a great event, it's just not for me, just let us know, and my team will give you a full refund. That's up to halfway through. Now, I know people are not going to want their money back. People never ask their money back at this event. It's just amazing, but that's there to take away the risk. So the special page you need to get these discounted tickets, because you're a Property Entrepreneur podcast listener, is, write this down, www.propertymagiclive.co.uk/PE for Property Entrepreneur. Nice and simple. I'll tell you one more time, www.propertymagiclive.co.uk/PE. And I'm sure we'll put a link in the show notes down, won't we?
Yeah, absolutely. Ladies and gents, if you're serious about going into property and making the most of it over the next few months and years, this is where I learned how to do these strategies. And like I say before, I've used it on small terrace houses. I've used it on big 6- and 7-figure developments. And if you want to start getting involved in property for the first time, or you're experienced and you just want to stop relying on the traditional methods of raising private investment and capital, the strategies that we taught on Property Magic Live are the ones to use in this capacity. I'll be there. I'll be speaking there. It's the 9th to the 11th of September, 3-day event. Those prices are an absolute no-brainer. Get yourselves booked onto that domain name now. It's in the show notes. It's propertymagiclive.co.uk/PE. And I can personally vouch for the content, the training, and the fact that this stuff does actually work in practice. And I'd recommend spending a day or a few days with Simon to learn it for yourself and put it into practice. Anything before we finish, Simon?
Well, I was going to say, thanks so much for that. And hopefully people got real value from this podcast today. And the whole idea was to inspire you and to open your mind. You know, it's going to be doom and gloom for many people the next year or so, but it doesn't have to be that way. You get to choose. You need to make a decision. And you know what? Just thinking about Property Magic Live one more time. If I lost everything and had to start again, I would be using purchase lease options. It's got to be the fastest way to get cash flow and potential equity growth from property you don't own. But even Dan, at your level, you know, I think you're probably using more of this creative finance on the bigger deals than you did even on the smaller deals. So no matter what stage you're at, You're going to love this event, and come and spend some time with me, spend some time with Dan, and connect with some switched on investors from all over the UK, and in fact, all over the world. So Dan, I'll just say thank you so much for inviting me on the podcast. I hope we've inspired people today. I look forward to seeing many of you physically in the room or virtually online for Property Magic Live. And just keep up the great work you're doing, Dan. You're changing lives, you're inspiring people, helping people to step up to the next level in business as we do in property. And it's great to be connected with you. And I look forward to our next skiing trip, Dan.
Yeah, absolutely. Always business and pleasure. Work hard, play harder. Simon,
Absolutely.
thanks for joining us. Those of you that have been listening, remember, like, success and failure are very predictable. And when we talk about observe the masses and do the opposite, what you're going to see in the paper, in the press, in the market at the moment is you're going to see more and more doom and gloom, bad headlines, and it's going to make people run for the hills. And just remember that low competition means high margins, but only if you've got these tools in place. So get yourselves booked onto Property Magic Live. I will see you there. Simon, thank you again. Enjoy the south of France. And guys, I'll catch you next Tuesday for the next episode of the official Property Entrepreneur podcast. Success and failure are both very, very predictable. I'll catch you then.